I can smell that the funds and the trackers, the CTAs, the hedge funds, everyone who's kind of, look down on the metals are starting to, get asset allocation into them. Like people are desk managers, the funds are telling people, we don't have any of this stuff on board. We're going to 1% gold, or we're going to 1% gold and 1% silver in the fund. We have to have it now.
Friday, January 23rd, 2026, Maneco 64, home of alternative economics and contrarian views. We've got Peter Carlin back on, and Peter is the co-author of A Pocketbook of Gold, a survival manual for monetary mayhem. So very appropriate, of course, with what's going on nowadays. And he co-wrote that with Jim Sinclair, and unfortunately, Jim Sinclair is not here to see what's going on, Peter.
But he sure predicted it.
Yeah.
Well in advance.
And just before we continue, this book, you can try to find it online. It's very expensive, limited edition. But now Peter's provided a PDF for which I will put a link below in the description. It's $25. I think it's worth it. So if you haven't read the book, I highly recommend it. Peter, the last time we spoke, you said that was January 5th. China and India are leading the world into a physical scramble for silver. So what's going on with silver? And also gold, of course. Let's not forget gold. Gold is up already about 14% this year. Silver, of course, is up over 30% in just 3 weeks.
Well, like I said in our last discussion, it was time to buy with both hands. That was about 2.5 weeks ago, and we were at $75 at that time. And it's time, I guess, for some people to break out the champagne, because we've just about touched 100 in Europe, and I suppose with $10 tacked on for the Shanghai market these days, we are over 100 in the East. So momentous days, and well, I hope bulls come in many flavors and temperaments in this corrida that we call the trading and investment arena. But right now it looks like El Toro has gone full throttle. And so I just wanted to say congratulations to the stackers and everybody who's hung in there, and say, don't forget to treat yourself. No one lives forever. Take 1% of that stack and go have the time of your life, because you've earned it. So
Yeah.
What's going on now? I'm sorry, go ahead.
No, I agree with you. You only live once.
You only live once.
Yeah. And I mean, there's a lot of, it seems like technical analysis right now is, it works. Like on a weekly basis, for example, when we broke out in August from that consolidation we had since April, I thought we'd go up to like 4,400, and then we'd see some kind of, that was my target, and then we'd see some kind of correction, and we did. And now, ever since we broke out of the previous consolidation, my target is 52 to 5,300. So I still think we could go higher here for gold. Silver, I think we will touch 100. It's only a matter of, could be later on today.
Yeah,
I think
probably will be.
Yeah.
Friday.
Yeah, we've been up to 99.40 on the spot. So I'll let you.
Right. So two things going on. As for me, I think, now you've got to kind of, especially in the gold market, you're going to have to look at whole numbers. 5,000, 5,500, 6,000. You're starting to get into an acceleration phase, which is why I said the last time you better start buying with both hands, because these things don't happen very often. But for people like me and you who've been doing this longer than we should have ever, you can start to get a sense for things when you spent how many decades I have, in this, that you're getting into this mass acceleration phase, that's starting to say that, okay, well, you're just going to take you're going to lift off. And part of the liftoff comes from the fact that you still have to remember that even though there's a huge amount of money in gold when you look at central banks and things like that, that gold and silver are still kind of thin markets, and it doesn't take much to get them going, especially when there's a popular scramble, which is going on now. And it's coming from every angle. The market's getting hit from every possible angle. What I saw in the past 2-3 days, which I don't have any kind of hard statistical information in, but just by looking at the way the market trades, is the funds are coming in, and they haven't been in this game for 50 years. They haven't been in this game since the mid 70s. So you can tell that, I can smell that the funds and the trackers, the CTAs, the hedge funds, everyone who's kind of, look down on the metals are starting to, get asset allocation into them. Like, people are desk managers, the funds are telling people, we don't have any of this stuff on board. We're going to 1% gold, or we're going to 1% gold and 1% silver in the fund. We have to have it now, whether that takes the form of miners, which is difficult because analyzing miners is got so much country risk embedded in it now. As Rick Rule says, if you're in silver and you're not in Mexico and Peru, you're not in silver. But Mexico and Peru carry a lot of country risk with them. So, people are going to lay into SLV. They're going to lay into the ETFs because it's easy, it's accessible. Me and you have the same opinion on the long run viability of the ETFs, but the funds will go there straight away, and they're going to be piling in. And, while they are piling in the past few weeks and months from the people who have a more of a hedge fund approach, now you're kind of seeing the tracker funds start to get interested.
Is that by watching the tape that you feel there's something going on?
Yes, exactly. I mean, the past few weeks, especially for us people like myself who are screen starers, who are just like on the market, that's what we do, looking for anything that's out of line and trying to figure out the tempo of the market, which is really important. That's why you could see, bit of charting, a lot of paying attention to the Asian market, which now means you got to get up really early, and then following through, with how the close goes in New York. You could have seen that the ratio was coming in and that silver was going to take control, and there were all these other factors going in. The legislation from the US, China locking in silver exports. Most importantly, the future dynamic of AI and data centers. I mean, these are not just business ideas. The AI race now is becoming the critical component for future national security. And that's for all three superpowers. So you can forget about getting any silver out of Russia. The ability to conduct electricity now is kind of the critical component that's coming into the national security arena. And it's going to be as important as the move from coal to oil was in 1912 with the British Navy, which upended the entire world. When they moved from coal to oil, you basically said the Middle East, especially at that time, Iran, and AIOC, or British National, I guess it was at the time, and AIOC was going to become this massively important asset that the world was going to conduct wars over, fights over, that the Seven Sisters were going to battle over, that the U.S. was eventually going to make part of, what the great historian Simon Davis calls contested space in Saudi Arabia, Iraq, and Iran. Became the tussle over the Anglo-American oil empire and how the U.S. elbowed its way in and the British tried to defend, the Americans from getting involved in Iranian oil. So now we're getting the same thing in the electricity space now. That means silver. And silver has a primary role in this transition towards electrification and use in military AI data center application, and moreover, other things that could be stuff like, is the new warfare weaponry going to be solar-powered drones, that are being conducted by AI centers? So the whole face of things is changing. I mean, and silver is catching the heat for
Yeah,
it.
and I mean other metals as well are very important, like copper and lithium. And
Cobalt.
would you say silver though is the most important? It will
I,
be.
I
Will
would
it
say that what
become like? Will it
you're
become
getting
like
it from
oil?
the monetary side,
Yeah,
the military application side, the trade
industrial.
side,
Yeah,
industrial and non-military. So it's kind of taking it from every angle, and there really is a lack of development of silver mines over the past 50
yeah.
years.
Oh yeah, and silver is usually produced as a byproduct of other metals.
That's
People.
Yeah.
And the other thing I see, Peter, aside from the world moving towards electrification and rare minerals, silver, is that the financialization we had from 1980 to 2020, where bond yields are forever like moving lower. I think that's over, and in relative terms, real hard assets are going to become more important. Do you think that's playing a part too?
It's becoming massive now. You can see, you've got a really incredible situation again coming from different angles. Okay, so you've got Japan, who are moving away, who is fueling the move away from treasuries into gold, but not for the reason that you think. It's not because Denmark's Fredrickson said that it was a bad risk. I mean, the question everybody's got on their mind for the fine lady from Denmark is, if you're going to move out of U.S. treasuries, we'd love to know what you're moving into. What are you going to move into? JGBs? Nobody will touch them. France, you're going to move into gilts or oats? Britain and France, when they're on the verge of an IMF bailout? You haven't got a lot of choices out there. So maybe you're going to be moving more into gold, and maybe even taking some kind of a position in silver. I don't really know what they're going to do, but what I'm saying is that for market depth, you're going to have trouble getting away from treasuries. But still, you're seeing a move away from treasuries, and you can see with the case of Japan that they're moving away from long-dated U.S. debt, of which they are the backbone of the foreign market at over $1 trillion. And you're seeing that they're doing it not because they believe that the U.S. is a worse credit risk or this, that, or the other, but they need it to support their own currency. They're now starting to have to QE. They're going to have to buy in the long-dated JGBs themselves, because a lot of other people aren't going to want to touch it. And we all know what their debt to GDP ratio is. I mean, what was it, 230?
250%.
So this is turning into a disaster. So just to keep enough oxygen going within the Japanese yen, they're going to have to start dumping treasuries to try and get themselves out of the hole they're in. So, what do we have? We have Japanese QE to infinity, as Jim's always said it would wind up with. And, the long end of the bond market was bought in, with low rates, artificially supported for years, but it couldn't be sustained. Like Jim Sinclair, my co-author of the book, said at the time, you're not going to have treasuries and gold going up side by side forever. Eventually, one will break, and now we can see what the break is. Bank of Japan already owns 95% of its own long-term debt, and they're being forced to liquidate so that they can keep building, so that they can rescue their own currency. But the problem with it is that two things are impacting them. Japanese exports are declining, and quite sharply, and China is stealing their car market. So if you look at their automobile exports, which is a huge part of the Japanese economy, their year on years are down like 25%. And of course, China's are up. So that's becoming a big problem. Their private pension system is loaded up with U.S. Treasuries too. You got the aging population problem, but the Bank of Japan owns 53% of the JGB market, whereas if you look at someone like the Federal Reserve, they own about 15% of U.S. Treasuries. And then to top it all off, from 2022 to 2024, they dropped 120 billion of U.S. Treasuries already. Now they're going to be accelerating. So you've got Scott Bessent telling everybody, don't sell Treasuries, and coming down hard on Denmark and whatnot. But let's not kid ourselves. The U.S. can push this away better than anybody, but it doesn't mean they can forever run from the problem. The bigger issue, which concerns, I think, the markets that we're involved with directly, is that Japan has something like 846 tons of gold, which is nothing. That's like $100 billion. When you consider the size of their economy, which is similar to Germany. Germany's got 3,300. Italy, which is about half the size of their economy, or maybe 2/3 the size of their economy, has 2,500. They have 846 tons of gold. They have not done a good job at keeping up, and they've got $8.5 trillion of outstanding debt against, $127 billion worth of gold reserves. And they should have rectified that decades ago. But,
Yeah,
they
it's
just,
only 6.8% of their forex reserves.
yeah,
The country actually that has a lot is Portugal. They've got 84.2% of their forex reserves in gold,
enormous.
382 tons.
Yeah, I mean, what's Japan? 90 million people?
I think it's over 100, 140
Right.
million.
Really? Okay.
Yeah, I
Sorry.
think so. It might have
Okay.
come down a bit, but yeah.
So even worse. I mean, Japan's got that kind of a population, and if you look at Portugal, Portugal's got 385 tons of gold for a population of 10 million people.
Yeah.
So if you have to blow up the monetary system and recast a new currency, Portugal's going to be well placed to do it.
Yeah. Not the UK. We've got 310 million.
Right. There you go. On what? On 58 million people, 60 million people?
Yeah, yeah.
Yeah. So they're completely out of the loop as far as recasting new currency goes. And this has been going on now for 20 years plus, and nobody's taken any remedial action. It's crazy.
I know you'd think the Bank of England would be adding on a little, or the UK Treasury would be adding on a little bit of gold to their reserves, but it doesn't seem to be that.
No, it doesn't seem to be. So, everybody's asking themselves now, with the treasury problems in the US, people are concerned with the Japanese having to sell some of theirs. And quite honestly, it might be some of the reason too why China is, bringing home some of the money associated with treasuries on the long-term U.S. debt, they have been moving down the curve to a 6-month duration, but is also because they need the money at home. I mean, they're mired in a horrible deflation right now, which everybody's trying to paint over as being a positive thing, but it's not. The economy is refusing to consume. They cannot get domestic consumption up. So, they're going to have to do something about inflating their way out of this thing. So they probably want some reserves back home if that's what they have to do. But, so you can see the world is searching for the new neutral reserve asset, or at least parts of the world are. Percentage of assets are. But there's nothing out there to really choose from. So you're going to have to go into metals and probably equities, or AAA, AA rated corporates, bonds. There's not a lot out there that you can do. And of course, you can see, as me and you said months ago, no matter how hard the US tries to push down the short term, the long term keeps going up and up. Me and you, I think, have some other friends in the market out there that agree with us. But remember, all of Wall Street and the entire financial press has told us how long-term rates are coming down. So, so the two of us managed to get it right, but all of CNBC, MSNBC, the Wall Street Journal, New York Times, and everybody else, Barron's, Forbes, all got it wrong.
And the bullion banks
Obviously,
as well. Their forecasts for gold and silver, they've always been like silly, and now I just saw Goldman Sachs upgraded theirs for net for this year. Even like PAMP, their analyst, early December last year, she said, "Oh, my objective for silver this for 2026 is 78, the high." And I replied to her tweet and I said, I think you could get there before the end of 2025, and it did. And here we are almost at 100. So, back in 1980, 2011, and also, I guess, 2008, we had these massive moves higher in gold and silver. And then they came down, and especially in 2011 and 1980 had 20 years of a bear market after that. And then 2011, about 10, 12 years. Do you think this time it's different? Like Jim Sinclair said, that the next bull market, we're not going to come back. Do you think that's what we're seeing?
It's starting to look like it, because really the truth is that unlike before you had the problem with mortgage-backed securities, the great financial crisis, you bailed out the banks and you consolidated the system. You let Lehman go, you let Bear go, you let AIG go, and taking with it.
Didn't they bail out AIG?
Yeah, they bailed it out, but it was more or less a corpse when they bailed it out.
Okay.
Hank never got his $5 billion back, I don't think. Ace Greenberg didn't get his money. But so what happened was they rescued the system. And so that caused gold to pull back for a bit. But everybody knew underneath it that the system really hadn't been rescued. It had been a can kick. So we went down for I don't know what it was. We went down from 2011 to about where did we bottom? 2015?
Late 2015, yeah.
Yeah, exactly. And I'll tell you, all kudos to my co-author, Jim. You might remember around 2013, he said, 1,048 is going to be the bottom.
Yeah, it was 1,045, wasn't it? I think.
Yeah. Almost to the dollar. Yeah. 2 years in advance, he said, this thing will go down to 1,048, and then we're going to turn around and go up. It's like, how in the name of God did you do that?
Yeah.
So that's the third one, the one that he did back in the 70s when we were at 90, and he said we're going to 900. And the one with the Angels of 1650 by 2011, he got that 10 years in advance. So, as he says, it's not magic. I just use a calculator. But anyway, the difference this time is we're entering a period of extreme chaos, and we are in chaos now. Not just kind of saying, oh, well, the world's gone crazy and stuff like that, but really technically in chaos. And all you have to do is look at the geopolitical scene, and we're in chaos. And this can't be rectified. There's not going to be any climb down from this. You've got the problem with Venezuela. Okay, Venezuela, is just got, Maduro just walked out or got taken out or something strange going on there. But it looks like the real plan is to make sure that China doesn't get any more oil exports from them. Or, is the West trying to choke off China's economy by denying them oil exports? Between Venezuela and Iran, you could do some pretty big damage. And if you look at what's happening now with China, they're stockpiling everything in the book. They're stockpiling like a prepper on steroids. They're bringing in, all year, crude imports were up at the end of last year, 17% year on year. And most of that is going into storage. Like stock building in 2024 was 84,000 KBD. 84,000 barrels a day was how much went into storage. Well, last year it was 430. So their storage play is 5 times what it was the year before. And this year you can be sure it's probably going to be another 5 times. So they are stockpiling crude as fast as they can go. They've got coal reserves. They're doing anything to turn coal. They're using all sorts of new processing techniques to turn coal into oil too. So they've done all this. They're buying all the silver they can. They're not letting it out. They're holding on to the rare earths, at least for now another 10 months or whatever it is. And they're doing all this while running a $1.2 trillion trade surplus. It's not bad. You're stockpiling and importing everything you can get your hands on and keeping it within the country while running a $1.2 trillion trade surplus. So you can see that, you have a problem. I mean, look at it from a geostrategic point of view too. Lower crude oil prices would be great for those people who want to hurt Russia, because it would hurt their economy. That's always been the kind of U.S. mantra. We'll ram the oil price down like we did under James Baker, and we'll throttle the Russian economy, and they'll have to capitulate. Okay, well, then you've just done China the biggest favor in the world.
Yeah.
I
heard that vis-a-vis Venezuela, China's looking into the legal avenue to challenge the U.S. legally because they have quite a few important contracts there. Even though Venezuela doesn't provide them with a lot of oil, they've invested a lot in there. So I think they're going to let it go easily.
No, I mean they do get. I think what their offtake from Venezuela is it's about 900 million barrels a day. So it's about 5% of what they import. And also importantly, that they just got stuffed for 20 billion.
Yeah,
because
that's what.
Yeah.
Yeah.
So they got stuffed for 20 billion, and they had a $100 billion term contract canceled. So there's a lot of damage that's been done there. And of course they're going to go and challenge it. Interestingly, though, right when we had this situation a couple of weeks ago with the 2 tankers that were steaming there, those two VLCCs got loaded and they got returned to China. So there wasn't a standoff on that. So you have all these kind of periodic things. Oh, we're bombing Iran, but we're not bombing Iran. Oh, we're boarding tankers from Venezuela.
We're gonna use force against Greenland to get it, and then he goes to Davos and says, "No, we're not going to use force."
Right.
I mean, it's such an uncertain and
chaotic
world, and even when the problems are solved, people are like, they're not certain what's next. They ask themselves, what's next? And the world used to be different 6 years ago before 2020. Everything used to run a bit more smoothly, it seems.
Exactly. Yeah. And with Venezuela as well, too, people keep saying how, the U.S. is going to go in there, and the oil companies are like, well, nobody talked to us about this. And, the fact that, they might want to, have a new production in there to get into the sour crudes again that can be refined in Louisiana for LLS, what they call Louisiana sour, and stuff like that. But the truth of the matter is, not only are the oil companies reticent to go in there because there's enough oil around. I mean, if they're going to go in anywhere, they're probably going to go back to Mexico and try and rearrange Pemex. Why deal with Venezuela? But you can tell that this is kind of a State Department plan because it mimics every State Department oil plan going back to the 1922 period with San Remo. The point isn't to get the oil and use it. The point is to neutralize it so nobody else can use it. And that's probably the strategy in Venezuela. This strategy of neutralizing the asset has been standard policy in the Middle East from 1920 all the way through to now.
Yeah, because I've heard as well that in the North Slope of Alaska, there's enough oil there for 200 years. So why not develop that, and why go to Venezuela for all that trouble?
There's crude everywhere now. There's so much crude, people don't know what to do with it. The Permian Basin alone,
Yeah.
there's just a wash in the stuff.
Yeah.
So you're right. And ANS, the Alaska North Slope, is a fantastic field that's barely been touched. And could
Yeah.
provide huge amounts of crude. But energy is not expensive. And quite honestly, it's interesting because if you look at what happened about about Tuesday, when it looked like the Iran thing was coming off the boil, crude fell 5% in a couple hours. The metals fell 0.5%.
Yeah.
So you can't tell me that short-term geopolitical crisis is what's pushing gold and silver up, because we just had a litmus test and the metals came shining through. There's a lot of oil out there and there's not that much silver. People can talk about above ground silver all you want. Yeah. Try and get it into a refinery to process it. Try and do that with it. Try and take, 2 million people's silverware and run to a refinery with it and say, could you turn this into bars? They'll say, well, yeah, we can, but in like 6 months.
And there are not many people who have silverware anymore.
That's true too. So, but just holding something that's of silver value, try taking it to a metal dealer and see what they'll give you. They'll give you melt minus 10%.
Yeah.
If you're lucky. They're not going to give you just melt. Because they can't refine it, and they've
got to make a profit to run the business.
Right. But they've got to turn it into bullion, and you know what else too? When they take it in, they have to give you cash today. Well, they have to wait in the refining crew till they can turn it into a bar that they can then sell. That's a cost to carry.
By that time, the silver price could have gone down too.
Exactly.
Yeah.
You have cost to carry, you've got risk. Now you're going to have to hedge it in the futures market, and you're going to have to tie up cash with that. Most of these metals dealers are small outfits. They don't have the wherewithal to do that.
Yeah. So do you want to look at the charts now, or?
Yeah, let's have a look. Let's have a look at the charts. Let's have a look at the basis trade.
Oh, yeah. Hold on, I'm going to bring it up.
The first one, just to quickly show you where cash futures is going now.
Yeah, there we go. Can you see it?
Yep, I can see it there. So, you can see where, I would say, look at cash front line, but then again, look at the front line open interest. That doesn't make it that worthy a market. So cash Feb might be better, but the real market is cash March, and cash March has gone flat. And then the rest of the curve is Contango. So we're getting into these high prices, and the backwardation, it's not really there anymore, but the curve is pretty flat. That just shows you that, look, the curve is flattening out, but we're getting rid of that prompt backwardation, but we're still going higher. If you go to the other charts now,
sorry.
Yeah, please.
I read yesterday that on the January contract, there's been already 8,000 contracts that have been warranted stopped for delivery, which is huge, wouldn't you say?
I would say that's very huge. We're heading towards delivery failure. I'll tell you. Yeah. We do this, and we have Hong Kong and Shanghai opening up a new clearing agreement next week.
Oh yeah, you noted that. We can come to that in a minute.
Yeah. So
I've got here this is the daily silver.
Yeah, there's your daily. My moment there. Is that another gap? And it sure looks like it to me. That doesn't look like.
I don't see a gap between the.
Well, you don't. That looks okay. That looks like a pretty leg step higher. You may not find it huge.
No, what I mean is there a gap. Usually, I think of a gap as the opening price on the next bar is way above the high of the previous bar.
Yeah. Well, we opened on yesterday's high and moved higher.
Yeah. So it's a bit of a gap, I guess.
Okay. Yeah. So anyway, I put a question mark there.
Yeah.
Just to be sure. So now go to the weekly.
The thing is that gaps are always closed. That's the old saying, isn't it?
Right.
But the thing is, the gold and silver market, they trade almost 24/7. It's hard to see gaps, isn't it?
No, that's true. That's true. And that's why you get the plus minuses on everybody is different depending on where they take their earmark. These charts are earmarked to CET, and they
Yeah.
restart at midnight on the
Yeah.
dailies.
So yeah, this line here, I guess, seems to have been broken clearly.
Yes.
Yeah.
So for the chartists out there, considering the influence that the East is having now, you may want to not look at your charts based on New York time. You might want to take midnight CET because that's when you're going to open in Asia 8 hours ahead.
Yeah.
So,
And so that's 11 p.m. GMT.
yeah.
Yeah.
So if you want to go to the next one again, okay, that's almost the same thing replicated with what we just saw, but on a weekly.
Yeah.
The opening for the week took place exactly where the high was for the previous week, the high close for the previous week, and lockstep higher. So it looks like a gap to me. To me,
Yeah,
it
there's
does.
a gap here too, the week before.
Exactly. So, this is kind of the stairway to heaven formation that doesn't look like a blow off, because if we keep, picking up these weeks where we just keep lockstepping up like dominoes, like Lego pieces, that's a very powerful indication.
Oh, so instead of like going up $30 in a week and then dropping,
Right.
more like a controlled move higher.
Right. I mean, you can see with the red bar there 4 weeks ago, classic back and fill, exactly 50% of the preceding bar.
Yeah.
That's always nice for health, very good for health, cleans the system out. And that's probably the basis for how we went the next time. And you'll see to the right of that red bar that when we finished the next week, we managed to close out the week just ahead.
Yeah.
Of the two preceding bars.
The other thing here, Peter, is that if you look at the move from here to here, it's from 50 to 80, and then we had a little bit of this consolidation, and now we broke out. So if you add, $30, which is the move here to here, you get 110. So I would say we could easily go up there in the next week or two.
Agreed. Yeah, I think the geopolitics and the chaos idea is really taking control now, because it really, like, for instance, what was going on with Germany and Merz saying, Russia is a European nation. Now everybody wants to talk to Russia. I don't, why would Russia be in a mood to talk? But I think what really happened is, you have to realize, in terms of diplomatic stance, the EU and its representative nations have almost no diplomatic, intercourse with Russia anymore. And so I think what happened, if you look at the timing of it, is, I don't know if you saw the Tucker Carlson Karaganov interview, but I think it's unnerved them. I think they're scared out of their wits now. The U.S. looks like
they're talking about nuking Europe.
Yeah, they're lowering the threshold. This guy is the architect of their nuclear policy, of their nuclear doctrine, and he's saying two things. He's saying, number one, we're lowering the threshold for nuclear retaliation. Number two, we reserve the right to use it in if a conventional war can't be resolved. And number three, if this thing's not over in a year or two, we may just end it. And so they're saying, yeah, well, what about retaliation? You have to get America to do that retaliation, first of all. And I know they say Britain has an independent nuclear deterrent, but I will assure you, the U.S. has the launch codes.
Yeah, and also compared to the Russian nuclear arsenal, the UK's I think is not up to par.
No, not really. So, that is one thing. And the other thing that people should realize too is that now you have this situation where Europe, the EU, is so scared of what the US might do next, after the Greenland affair, that they're trying to get Russia back in the game. I mean, these Merz is desperately calling Russia a European, country,
Yeah.
and this is coming from the nation that called Russians and Slavs filthy Asiatics for decades and decades. I think you're trying to kiss and make up with the wrong people. They're not listening to you anymore. And one of the things Karaganov said, which was very interesting, no primero idiot Vostok, we are going to be looking east. They're thinking of, you consider how powerful China and Southeast Asia is going to be. They're going to be moving all sorts of development. Well, they already are, but whole cities and people to the east of Russia, because that's where the action is going to be economically. So you might consider Russia to be a European nation. They're more than happy to be Asiatic.
Yeah. And there's concerning the Europeans, I think my wife was telling me, and I knew this, but I hadn't thought about it. Apparently, Henry Kissinger said once that it's not good to be America's enemy, but it's even worse to be America's friend.
Yeah,
and I think the Europeans are realizing that.
Well, yeah, it took a while, but the old poker adage holds true. If you're sitting at the poker table and you don't know who the sucker at the table is, it means it's you.
Yeah.
But it seems that the EU didn't really figure that out. And, it was evident to everybody who wasn't lost in hubris.
Yeah.
Honestly, anyone with the slightest experience at all in the history of strategic force posture could have told you 20 years ago that Europe could not stand against Russia on its own. But if you listen to it, and it has no money to create a military force of any consequence, yet anybody who has lived around the rank and file, more even not just rank and file, even the educated elite or the average Joe in Europe knows that every one of these nations, especially the British, especially the Germans, have said over the past 5 years, they all said we could defeat Russia with one hand tied behind our back without US help. Pure hubris, completely lost in their own delusional world. So no wonder they didn't know they were the sucker at the poker table.
I think one guy that is going to lose out bigly is going to be Zelensky.
Yeah, I see he showed up. He was told to stay away, but it was like a 2-second show at Davos.
Yeah.
I think everybody's had it with Mr. Zelensky.
Yeah.
Also,
because if the Europeans want to get friendly with the Russians again, they're going to have to give up on Zelensky.
Yeah, Project Ukraine's going to have to die.
Yeah.
But everything's been invested in Project Ukraine. So how do they get out of this? They cannot get themselves out of it.
With great difficulty.
Yeah. Also, and that 90 billion that's supposed to go to Ukraine, only 30 billion of it's going there. The other 60 is going to their friends in the defense establishment. But does anybody ask themselves, okay, yeah, you want to build an army? First of all, you want to build an army or a military to take on Russia. It's going to take you like 5 trillion euros in a decade, and they don't have a decade, and they don't have the 5 trillion either.
No. So as we wrap up here, Peter, could you tell the viewers how, what do you think they should be doing in terms of, there's people who trade, of course, which I kind of do with the precious metals miners. And I don't even trade that much. I just hold them for now. Sometimes I go from silver miners to gold and vice versa. I rebalance it, and I don't trade gold and silver futures anymore, nor options, because I found that the options market makers run that market and make it hard for people to make money.
Oh,
but
impossible.
Aside from that, what do you think they should be doing? Just hold on to your stack, try to keep stacking. And
I would say two things. Of course, hold on to what you have. Celebrate with some of it. Don't be a complete Mennonite about being successful. But in the same respect, there are a few things that are going on that I think are worthwhile in the market. And the last few days and the last week, our star performer has been platinum. And platinum has got so much catch-up room in it. You've got to be crazy not to be moving some of your either metals or cash, into the platinum world, because we've just got so much room to make up. If you look at the differential against gold with platinum, I think about 6 months ago, we touched a 150-year low or something ridiculous. I think there is some truth in the adage that, if you want to make real money over the long term, find things that are left behind, or find things that are discarded, left behind, or find things that are actively hated. And to me right now, that means platinum and nickel. Nickel's starting to get very perky and has a long way to run. And platinum, I think, is going to be a star performer over the next
I
few
got
years.
the chart here, platinum monthly chart, and we
Right,
just broke the 2008 high.
right.
And I
There you
remember
go.
at that time, platinum was worth more than
Gold.
gold. Yeah, gold
Yep.
was at 1,000, platinum was 2,300.
Right. So
So
I'm quite big on platinum, especially in the next year or two. Going out 2, 3, 4 years, I firm believer in nickel. Silver's had a tremendous run, and it would be nice to just say, well, we're going to 200, and maybe we are. Who knows? I think the past 2 weeks has shown us still that when geopolitical events start to get heady, we still move towards gold instinctively. That's because the central banks are involved, and the big players need to get, they need to get the weight on board, and it's tough to do with silver.
yeah,
So, but the smaller players still like silver. It's had a great run. There's probably more left in it, but I would say that if you want to juice the position, start shifting into nickel and platinum, especially platinum. Hold gold for everything you got, and whatever it is, stay away from the ETFs. That's where, and also one thing you're going to have to think about too is, and I'm not going to speculate on this. I'll let everybody think about this themselves. But on the day comes when deliveries don't happen on COMEX, think about what the knock-on effect for ETFs is going to be if that happens, and think of what's going to happen to the custodian structure of these ETFs too. I know most people are, good with physical in the hand. That's perfectly cool, especially with the American and Canadian audiences. Europe might be a little bit more restrictive. So think about what you're going to do with your stack. I know a lot of people out there saying, I'm going to die with it in my hands and give it to my kids. That's fine. That's all well and good too. But you might want to buy yourself a pair of good cowboy boots with some of it, not all of it. You never know when when something real and tangible, like people say, maybe farmland, maybe this. So don't go all in still, although all in has been the place to be. Hindsight's always 2020. But look further afield in the metals to get more alpha, and especially in the platinum market. I think platinum's going to be the star performer in the next year or two.
And so let's say GLD and SLV, if there were delivery problems on COMEX and LBMA, do you think that would basically bankrupt those ETFs and you might lose your money?
I'm going to quote Jim Sinclair, my co-author on this. When the history of ETFs is written in the future, the stories and tales that you will hear will set your hair on fire.
Well,
I'm going to leave it at that.
okay, great, Peter. Thank you for coming on again. I always enjoy speaking with you, and have a great weekend.
And you.
Thank you.